Hey team, this message is for our bookkeeping buddies out there. And I know when my firm offered only bookkeeping, it was super hard to find a tax preparer to partner with. Well, if that's you, look no further. Me and my team at Specialized Accounting are looking for bookkeep to partner with. We will do the tax planning and preparation for your clients, and you keep doing the bookkeeping. No longer have fears of working with a tax preparer that doesn't know what they're doing, or live in fear of them stealing your clients. Me and my team, we want to continue to grow, and I want to continue to grow Unaccountable without growing the name that we steal clients. So we would love to partner with you. If you're interested in working with our team to do the taxes for your clients, reach out to hello@specializedat.com. That's Specialized Accounting and Tax, specializedat.com. See you soon. Welcome to Unaccountable, the world's okayest accounting game show podcast for product news, updates, and more. I am your Mac Daddy of a host, and I'm joined by Daddy Mac, Jeremy Van Grohl.
Ooh, hello. Good to see you. Ian, hit me with some crisscross. Let's jump into some things here. First of all, Tyler, way to ruin it for everyone.
What did I ruin?
I don't know if you know that, like, before we had our last podcast, I think it was our last one, never heard of Perplexity. Mm-hmm. And then just yesterday, the New York Times put out an injunction and I don't know what the right legal term is, that they need to stop Perplexity needs to stop having their bot go and grab their articles for sources.
Really?
Yeah. So our tens of listeners opened this up and it like brought Perplexity out into the front, so much so that the New York Times cease and desist immediately.
That was my fault. You know, I'll accept that responsibility. I know that was me. So you've been trying it? You love it? You've been playing with it?
I did. I just tried it the other day for something. And yeah, like, again, going back to what we said, the source material is there. None of them are in New York Times. Pretty sure the ones I was looking at. But yeah, just seeing where it's going from and being able to jump to that next level and dig into things is fantastic.
Jeremy, I also want to jump into one other fantastic series of articles that just kind of culminated recently. But have you seen the latest TurboTax commercials that came and went?
I did.
Adam Levine singing.
Oh, I don't think I saw the one with Adam Levine, but I saw that they're like matching pricing and stuff.
Or maybe it's not Adam Levine. I think Adam Levine is Maroon 5. It's Adam, whatever the funny one is. I'm getting my Adams mixed up. Adam, I don't know. From Modern Family. But anyways, or Pitch Perfect. But anyways, so they had all these commercials about come to us at TurboTax, ditch your current tax preparer. We will guarantee to beat the price you paid last year. And there have been rages of complaints from accounting societies basically saying, this is almost what Scotty Scarano was saying when he was on with us, of like how Intuit will slash your tires while you're in at the party. Mm-hmm. So the National Association of Tax Professionals expressed his disappointment, basically saying, hey, they're selling professional preparation software to the tax professional, but now they seem to be undermining that tax professional who they've been selling the software to, essentially saying, hey, we gave you a Trojan horse to then come and take your clients away. Intuit has since walked it back, stopped those commercials, and say like, hey, sorry, our bad. Their spokesperson let out, while our current TurboTax campaign was intended to encourage tax filers to file their taxes with a tax expert, we will evolve the creative and ensure it has the intended impact so the benefit of filing with the tax preparer is crystal clear. I call BS on this because what they're saying their intent was to encourage someone to file with a tax preparer. Their whole campaign was, we're going to beat the price of your tax preparer. BS, this is them trying to walk it back.
You're leaving me?
For a TurboTax expert who charges me less but gives me more. Sing it, Adam.
Best believe TurboTax will beat your price.
It's time to move on to a TurboTax expert. This fall, switch to a TurboTax Live expert and we'll beat the price you pay.
You know, the QuickBooks team is over here advertising, hey, let's do the accounting, let's partner with accountants. The TurboTax team is like, how do we increase sales? Let's steal all the work from those accountants.
When did they walk that back, though? Because I'm pretty sure just yesterday I saw an advertisement on a website or something saying that, you know, we get all the crazy accounting-related, tax-related stuff showing up because of all the cookies.
I mean, this article is as of October 15th that I'm reading on Accounting Today. Yeah. Now, the interesting thing, though, is, I mean, this is totally me speculating, but if ad dollars are already spent to run a certain amount, maybe they're just ceasing putting any future ad dollars, but let's just those. I'm purely speculating, folks. This is not news. This is me arguing because I have seen these showing up between me watching episodes of Taskmaster on YouTube.
Wouldn't it be awesome at like the kickoff of Intuit Connect, someone just goes up in the middle of the opening ceremony and just rages on it, like, you screwed us into it.
I mean, they're doing so much, and we're going to get into it later in this episode of how they're releasing an enterprise version of QuickBooks Online and so much to talk about. But yeah, Intuit is really in the doghouse right now. And also, I don't know if you saw this other update that came out in the last 24 hours of them offering a new product. And Jeremy, I don't know if I can make heads or tail of what this service is, but essentially they're saying something to the effect of if you send an invoice to a customer and it doesn't have a payment method turned on, the customer can pay a fee to override that and still pay. So essentially QuickBooks is saying, hey, we'll just take money and do it anyways if the customer pays for it. I don't know. Did you read this differently or?
No, I got like the email, I think late last night or something, or late yesterday, and I didn't even open it yet to read what it was, but it just seemed weird. Yeah, that like, even if this isn't turned on, we're going to take their money and then like, I assume they still pass it along to your firm, but is there more fees there? Yeah.
Because the exact verbiage is when a QuickBooks customer with an active payment account, so I've already gone in and set up my payment account, so they have my direct deposit information on file.
Yeah.
When a customer with an active payment account sends an invoice with all online payment methods turned off. So I've turned off all those methods, telling my client, hey, pay by check or pay whatever method you're supposed to. The customer will have the option to pay the invoice online by ACH payment for a flat convenience fee. They can override how I said I want to get paid and give Intuit money to override my preferences of how to pay the invoice.
That's brutal. Because think about like, even when you try to do your own books, however you accept payments, you have a process on getting that in. And if you do any like customer profitability and this is posting this wherever, when, yeah, that just throws a whole wrench. Where'd this payment come from? Wait, I don't have that turned on. Oh, son of a, yeah. Ugh.
It's absolutely brutal. So Intuit, we'll see how QuickBooks Connect goes for you.
Yeah.
Well, Jeremy, I'm excited because another week, another guest. In fact, double your flavor, double your fun. We got two guests this week. We got Jesse and Tom from finoptimal, and I know you've heard me man crush about their products a little bit, but can't wait to get in and talk about what else they got coming up. Tom, Jesse, welcome to the show, gentlemen.
Thank you for having us.
Thank you. Love the energy. Love the energy.
Yeah, it's nice to see you without hot sauce all over our faces.
Yes, we will be getting into that. Or did I actually do the intros wrong? Should I said Jesse and Tom? Like, Jesse, aren't you Tom's boss? So, like, did I do that poorly? And
I mean, and if you also, when you do it in that order, it sounds like Tom and Jerry a little bit. People want to hear.
Oh, yeah. Okay. I could see that.
I think that's why it
also,
rolls off the tongue.
The alphabet. I don't know. Take your pick as to why that was the wrong way to do it.
Well, if you're on Unaccountable, of course, you're in the right spot for doing things wrong. Gentlemen, I would love, real quick, just quick intro into who finoptimal is. I don't know which one of you wants to take it because we're not really good at sharing here and taking turns, but who are you guys? Who is finoptimal?
Yeah, I mean, it's Jesse's company, so I'll explain it, I guess. That always works really well. You know, finoptimal is an accounting firm and a software company all at once. Jesse, as much crap as I'll give him on here, is just a brilliant accountant and a brilliant engineer. And he built finoptimal out of necessity because he just absolutely hates doing stuff manually, arguably to a fault sometimes. I'm sure maybe we'll debate that later, but he hates doing stuff manually, built apps so that our accounting firm could do the books for businesses on QuickBooks Online more efficiently and more accurately than just throwing death and human suffering at it like many traditional accounting firms do. And a year and a half ago, we started releasing that software to the public, and that's how we met you gentlemen. So that's us in a nutshell. How'd I do, Jesse? Did I represent us well?
I mean, I have to say that was great. At first, I was like, why is he speaking for me? And then I'm thinking, oh, he's better at that job than me. So
there you go.
Yeah, well put. Except the to a fault part. I don't know about that, but.
Well, and I feel like death and human suffering is like Intuit's goal most of the time. So we appreciate you guys that are like, let's fight them on that. That's fantastic.
Tom, don't respond to that. We don't want our developer key pulled.
Yeah, I'll do that. No comment. Ooh. Intuit is great.
Oh, all right.
They've never done anything wrong, and QuickBooks Online is amazing.
Like we're going to Intuit Connect later, and I feel like they may have assassins out for us there. They'd be like, "Where's Jeremy and Tyler?"
Our
and
booth will be shuttered. It'll be shuttered, and there'll just be
on
a
the roof.
black curtain over it. It'll say "Next booth, please."
Well, and this episode drops the Thursday before we all hang out in Vegas together. So,
yes.
perfect timing for them to reprimand all of us.
Welcome to Fast Figures. 10 questions, 1 minute-ish. All answers are numbers. The game starts now.
Well, gentlemen, I am excited because we get to run you guys through the gauntlet that is Fast Figures. Now, as both of our listeners know, we're going to run you through 10 questions and see how well you guys do. 1 minute on the clock. Here we go. Traditionally, over how many years does an accountant depreciate a vehicle?
7 years.
7.
LimeWire was famously popular for music sharing platform of the 2000s. That platform allowed up to how many simultaneous downloads at a time on their free plan? Within 2, you got a window.
3. Or I was going to say 2 to 4. Yeah.
5.
According to WeWork's website, what percentage of Fortune 500 companies have teams or offices in a WeWork around the world? 1/2, 1/3, 1/4?
1/3.
1/2.
Intuit just announced their Intuit Enterprise Suite earlier today. Among other improvements, it will allow up for how many new dimensions?
4.
2.
Unlike the number of them that are on this show, how many Stooges are there on the original show?
3.
3.
In an effort to accelerate the process, the IRS recently announced that it is currently processing how many claims for the ERC, totaling 10 billion in claims. You have a 100K variance here I'm going to give you. How many claims?
250K.
I have no idea. 900,000.
Within 5 years, what year was Slack created?
2017.
2013.
AICPA and NASBA are entertaining reducing the number of education college hours required from 150 to what number?
120.
120, but 150 is not even, that's not even that many. What's going on?
In the hit YouTube series Hot Ones, where guests suffer through 10 hot sauces, what number hot sauce is the bomb traditionally?
10.
9.
To do a proper accrual, an accountant must make at minimum how many distinct journal entries?
2.
2.
Well done, gentlemen.
There's a lot. Yeah, I feel like I want to go back and like defend half of my answers, but yeah, I might have.
Well, that's what we get to do right now.
Yeah, we can do
Okay.
that.
Oh, great. Okay, awesome.
All right, so let's walk through it and see how you did. I actually don't even know the scores, but thankfully we got Jeremy over there.
I'm tabulating right now.
All right, question 1, gentlemen. Starting off with, relatively simple one, but traditionally, how many years does an accountant depreciate a vehicle over? You said 7, and traditionally it's 5 years. Now, this is what I love because you guys, you have software that does this for you automatically. This just proves how good you are at building tools that you don't even have to remember the numbers anymore because you said it 3 years ago and forgot about it. Am I right?
100%. That's the best explanation. It's definitely not just me not knowing.
The best part is if you set it to 7 and then you listen to this episode and realize it was wrong, just go reset it and we'll rebook all the entries for you.
Which is exactly what we're going to get into in our app snack, talking about Accruer and how we can use this tool. I want to dive into the next 2 questions real quick, because this is really where I want you guys to talk about how this journey started. Question 1 was LimeWire was famously popular in the 2000s. Up to how many downloads could you do at once for free on their free plan? I said within 2. You both guessed 4 or 3.
4 or 5,
the correct answer is 8.
Yeah.
8.
On the free? Wow. You can tell I wasn't a developer on that one.
Well, and I want to pair this with the WeWork one. How many Fortune 500 companies, according to WeWork's website, so they're self-promoting, have an office somewhere in the world with a Fortune 500 company? The correct answer, with Jesse getting it right, 1/3. According to their own website, 1/3.
And he was an internal audit too.
Yeah, well, guys, listen, everybody knows that WeWork definitely always has very transparent and accurate numbers. And I definitely had no reason to believe that the biggest possible number would be on the website.
Yeah, no, Tyler's number was the community adjusted EBITDA.
Yeah, it was the community adjusted as Fortune 500.
So real quick for the listener, why we're so amused right now is I want to go back and Jesse, your background, you were with LimeWire historically in the 2000s. Tom, you were with WeWork. I'm curious how either of you, and Jesse, maybe you go first. What is that transition like going from working for a startup that is so famous like that? Tom, you next, of the corporate, massive mega growth companies to now an accounting firm that does software. Like, Jesse, what does that transition look like?
Wow. I think a lot of it is becoming a self-taught developer. I always loved programming when I was a kid, and I worked at a place that people programmed and people, wrote code to get past small problems. So I'm sitting there doing the books for a bunch of, LimeWire was part of a larger conglomerate called Tower Research Capital. And these hedge fund developers are writing scripts to go onto the bank and pull their positions. I'm like, hey, show me how you do that. That'd be really valuable for bank reconciliation, begging, borrowing, and stealing time. And then discovering, wow, I like this and I'm good at it. And from there, my roles became increasingly technical.
I'm even more of a fanboy now because I loved LimeWire back in the day. I remember like college dorm. Yeah, let's hook this up, get an internal network. That was fantastic.
And that's what taught me.
For you is telenetwork.
When I learned about well, Jesse and I met on Chat Roulette, actually. I don't know if you guys know that.
Cool.
We were the last 2 users on Chat Roulette. Someone was like, oh, he worked, to tell me about Jesse and finoptimal, and he worked at LimeWire as a CFO. And I was like, LimeWire, you don't say. And then I was like, okay, this guy's interesting. Let me see. So that's kind of how we linked up here. But being at a company where you see so many things going wrong at once, right? Like a lot of people were like, oh man, it must have been a disaster. But I think the thing that I take with me is like they hired great people. And I think, certain people made bad decisions, but just bringing culture and a lot of the good things that made WeWork great here and trying to make sure that that's reflected in our product and like how we interact with people is like the number one thing that I take from WeWork is that like be awesome, like look awesome, and like just provide an amazing experience, and everybody else is going to love you. Just make sure you're just like not making up numbers or signing leases that are really, really unprofitable. If you just don't do those two things and copy everything else, you'll crush it.
Have you at finoptimal, thought about creating your own community adjusted EBITDA and factoring in happiness and removing key expenses? Like, is that going to help you? Like, maybe this is the new wave.
That's our next product, actually. Yeah, it's just like it's just fairy dust. You sprinkle on your QBO and it makes you look like you're rich every morning. You have to act rich to get rich, right? So that's the next thing that we're going to release.
I love it. Intuit just announced their Intuit Enterprise Suite today. This is recording as of 10/16, or they just demoed it. Among other improvements, it will allow up to how many new dimensions? You guys guess 2 and 4, even multiply those together. We are not up to the 20 new dimensions. And for you end users that don't love databases, think their class feature right now. You can create up to 20 new different fields for classes. And they're advertising multi-entity, but it's still unclear as to whether or not the whole balance sheets will remain separate or not. They're advertising segregated user permissions. They're also centralized chart of accounts with restricted access, controlled centrally, classes being controlled centrally, like being able to manage, but they're not advertising a price. I'm curious, as someone who is building products to work off the back of a monster that is Intuit, what is it like trying to manage that moving target?
I guess we're going to let me start with this one, Tom.
I was going to make a joke. So yeah, you answered, you give a real question before we get kicked off at Earmark.
I'm guessing Enterprise is sort of a level above Advanced. It's a QBO tier that they announced.
It's a QBO. They did the whole demo about an hour and a half ago. But Intuit's not new to releasing new features. The interesting things I thought is someone asked in the chat, is this your response to Sage Intacct? And they said yes. Like someone from their team said yes. So like they're actually going at it. And then some goon named Tyler Otto asked the question, are all these new dimensions accessible to the API? And they say, not yet.
I love that you asked that.
At some point it will be, but not yet. And then, of course, I asked the follow-up, when? And nobody answered. So I'm curious because all my favorite tools, Relay, Keeper, finoptimal, I can't use a new thing in my firm if I can't play with it in the integration. Like, where do you guys sit? And maybe I'm getting you a fresh reaction off of hearing the news.
Yeah. I can't wait to see people continue to make separate accounts for every single thing, despite the fact that there are now 20 dimensions instead. That's the first thing.
Amen, because we all know they're still going to do that. Yeah.
Yeah, and the second is that's just 18 more ways that people can just like create unnecessary data messes, right? Like I don't know, Jesse. I mean, Jesse's created ways to have synthetic and custom fields, but like, what's the most that we've ever used, Jesse? And even like our most complicated client, not even close to 20.
Using like entry flex 1 through 5 and line flex 1 through 5. They in theory have. I mean, we've never used more than 3 or 4. Yeah.
Right. It's just like.
Yeah, there's a lot there. I mean, definitely there's a risk of massive overkill, even in larger organizations. You know, I worked at the D.E. Shaw Group for 11 years, and they used a much larger general ledger package. And, you know, 3 levels is more than, I can definitely imagine making use of that many. But it sounds like, hey, we want to be at feature parity with some of these competitors, which I think makes a lot of sense. That would have I love that was your question to them, Tyler, because that would have been my question. And then tack on, and why is your payroll product, the paychecks that you book in QuickBooks, those paychecks are not accessible to the API. Your own payroll platform is not accessible. You know, so I think that this,
Other stuff that came from the chat that you won't see in the recording, someone asked the question about, will payroll be able to work across all the entities? Not yet. And also, all the reporting for right now is only for consolidating all your entities in the suite is only going to be available through Spreadsheet Sync, not natively in the app for the foreseeable future.
Look, I want to comment a little bit more broadly if we have time, because I think that Intuit's built something very good with QBO. I think that their strongest strategic move was exposing and really making the API nearly complete. I was around before like transfers and deposits were accessible to the API. They were still like, there were certain things we had to tell clients, if you don't make this a journal entry, if you book a deposit, if you book a transfer, you're on your own. We can't see those. And now by this point, you can do all sorts of great things. And I think that was a strong move, because they said, hey, we're going to build a platform and we're going to count on third parties to fill in the blanks that we can't possibly think of. And, you know, they've taken an approach of, hey, some of these companies we're going to buy, some of them we're going to partner with, long-term partnerships. And I think it will be in their interest to continue to make API complete, because I think it's been their secret weapon for certainly for taking Xero off the board in the United States for the most part.
Yep.
I know there are some adherents, but yeah, I could fear it. And some of my investors say, what are you doing, opening a SaaS now? Like Intuit can just imitate Accruer and blow you out. Yes, they could. But if they did that, other developers would see that and say, oh, maybe I should. Like, I think that they want to build a strong relationship with developers because they know ultimately it's better for their users and it's better for their product. Having said that, yeah, I think part of our advantage, Tyler, the way you're thinking, I can't believe you asked that question. I want to come to
you guys should just kiss already.
Give you a hug right now, but
I'll give him a key to my hotel room at Vegas.
That's right. People are going to figure out they're not going to get it right. They're going to take steps toward the right direction, but we and competitors of ours and complements to our software are going to fill in those blanks. And, there's always something new to build. If how many people are going to be willing to pay for it? How many people, there's a lot of unknowns to them. I think their interest is we don't want people leaving QuickBooks for NetSuite or Sage or whatever it is. And there's been a blind spot. And as those platforms have been reaching down market, NetSuite, Sage, they've got now the scope of the questions. I've pushed it too far, but
yeah,
I think 20 is a lot. I think it's a good move, but they better make it API accessible if they want us to engage with it.
20 feels like that's why asking you, Jesse, how many is the most we've ever used? Like massive 20 overkill. Feels like when you see SPF 100 and you're like, it's the same as SPF 30. Like it's just a market.
It's worse. You can tie yourself into knots, right? What you do is you come up with the clients like, oh, I can track all the. I can think of all 15. And then the second month's close comes around and it's like, well, you wanted me to put this class for that and this department for that and this other thing. And now I've got to make a bunch of decisions. Oh, maybe I don't want to classify.
Limitations breed intentionality.
My background was in corporate accounting. I worked for a Fortune 500 manufacturer, and I think we had 4, and we had SAP, right, doing all the things. And I'm like, it's like product lines and regions. Looking like, yeah, you're going to get just serious overkill. And somebody that's like, hey, I'm going to take advantage of these and just getting the communication to have that data come in accurately and have it, it's going to be a nightmare. Someone's going to run too far with it.
Well, and ultimately, I'll tag onto this, Jesse, but they have not announced the pricing. Who knows what's going to come of it? But to your point, the API has been their secret sauce. Think about Apple when they were first created and the Steves said, we're building everything in-house. No one else can build on it. And then Microsoft comes along and kills them for 2 decades. And then when do they make their resurgence? When they say everyone can build on our platform, anyone can push something into the App Store. Now Apple is the default belle of the ball, not because we love Apple, but because every app is friggin' here first. We only love Intuit because we can use our favorite tools, whether it's Financial Sense, Keeper, Zenit, Carbon Canopy. Like, we fall in love with those programs, and then they all work on top of it.
And of course,
and finoptimal. That's why we have you here. Yes. All right, gentlemen, we can
You're
beat
such a
on this
pick me,
later.
Jesse.
by the way, tags, make tags API accessible.
Yeah.
That would go a lot further than more dimensions. A lot of our clients and customers ask for that, and I think
And project, right? Projects available with you guys?
some project functionality is available, but not enough of it. I agree with that too.
Or reconciliation data, maybe.
Oh,
I don't know.
Yeah.
Let's pull all that. All right.
I mean, we have a
Moving on
product
to-
coming out that's going to compete with that, though. So we won't go there.
Tease it here in a few.
Yeah.
Unlike the number of them on this show, how many Stooges are on the original show? Avoiding the shutout, you both successfully answered that. And for bonus points, you guys working together, name the 3 Stooges. I'll even give you the 4th if you got it.
Larry, Curly, and Moe.
But that's
Who was
weird
the
to say it in that
sometimes
order.
replacement?
There was a 4th? What?
There was
I
a
don't
4th
know.
one that would step in from time to time. Actually, there was a 5th and 6th that would sometimes still stand in.
Your level of nerdness.
Unfortunately, I'm not up to date on my 3 Stooges lore.
No worries. Just want to make sure you guys get a point. Not to put nothing on these 4 Stooges here. In an effort to accelerate the process, the IRS recently announced that it is actively processing how many claims for the ERC totaling 10 billion. I gave you a 100K window. One of you was close, but it's 400,000. Tom, I believe you said, no, Jesse, you said 275.
Tom said 900, so I'm just happy he's further away.
I had the same process as the person picking 20 dimensions. I was just like, big number.
Yeah.
How about 900,000?
Well, and gentlemen, I bring this up not necessarily that we need to beat the ERC dead horse, but for those of you out there that have clients constantly harassing you, where's my money? Where's my money? Yeah, Jeremy, you and I are both thinking about specific clients. Listener, this is valuable news to at least be able to tell your client, hey, there's hope on the horizon. Jeremy or Tom, Jesse, anything to add on this? Easy.
I mean, just being on this podcast has been enormously educational. I'm going to start watching every episode.
And all I can keep thinking of is jokes like, it's my money and I need it now. So, like, yeah, let's just keep it going before I say anything else.
Next question. Within 5 years, what year was Slack created? Tom, you said 2013. The window was 5. The correct answer, 2009. Point for Tom.
Wow.
And I bring this up because I don't know if you guys know this. There's a great podcast Guy Raz does, How I Built This. And he interviews the founder of Slack, who started a company that was a massive gaming platform. It failed, but they took their image repository, made it Flickr, and sold it to Yahoo for millions. Tried to build their company again, failed, but their internal communication system they built was repackaged and sold as Slack for billions. Ooh. He's never succeeded, but he took his original intentions and now has built massive companies off that. And I look at the parallel to finoptimal, which started as an accounting firm, but is really taking shape as a software company. What does that journey look like trying to pivot while actively maintaining a business?
I'm commenting.
I
think about this all day because it's really a very different enterprise, right? I love to talk about this with clients whose books we are doing. The permissible uptime of software can be 15 or 20%. Not that it ever was for our CAS practice, but like you can have outages, you can have counterintuitive features, you can have no customer success. And when you're selling software, there's no tolerance for that. You've got to get back to people quickly, especially accountants who rightfully distrust most new software that comes out. You need to become a different company. And, you know, we've tried to do it by starting to look at our CAS practice as an internal customer where, all right, you know, the stuff that we haven't released, we need to make that reliable. The stuff that we have released, it's 99%, you know, 99.x. So that's Those are the biggest things that come to mind. Sales, marketing, customer support, product, right? It just can't be all inside my head anymore, right? If you want to do something fast, do it yourself. If you want to go far, you got to get other people to help build it.
It's incredibly different.
I know in my company, I'll write simple tools here and there for my staff, and they'll be like, oh, this broke, something changed on the export, how it feeds. I'm like, all right, I got time Tuesday, I'll get to it. You don't have that luxury anymore, do you, Jesse?
No, we've had incidents where we're getting up in the middle of the night, or, you know, Intuit changed their API. They made a breaking change to their API last week. And all right, you know, I don't think they meant to, but that's my problem. Yeah, that's not my fault, but it is my problem right now. So, okay, that's just a reality of being a software company.
Well, I commend you guys on embarking on the switch.
We were joking about this double-edged sword of being the firm and the SaaS company like last week, which was like, you know, as a firm, sometimes you're like, hey, use Ramp and use a virtual card and just set a limit. And if you ended up not wanting to pay for the software anymore, just cancel the virtual card. And then on the other side, as a software business, we're like, why can't people just go in and cancel the subscription? Stop just turning off the virtual cards. And that's like the dichotomy that is this. We're like on both sides of the fence on that. And it's just like, God, like, please just tell me you're canceling. Like the amount of time it takes me to chase you down. So yeah, anyway, I think it's funny sometimes to do both. Two different
AICPA and NASBA are entertaining reducing the number of education college hours from 150 to 120. Both of you hitting the nail on the head at 120. Tom, specifically for you, does this make you bitter as someone who had to go through the 150 hours to get your CPA, or do you think it's a good thing, or is it both?
Oh, I've got hot takes on the CPA that Jesse and I will
I'm trying to remember
over.
if I had to do 120 or 150.
You probably did 150 too. Tyler, I have those 3 letters on my name. I've never booked a real journal entry in my life, and I've never filed a tax return. I think for me, those 3 letters say I am really good at learning and taking tests. I think that's literally it.
You've never booked a journal entry?
I've only booked fake journal. I've booked test journal entries. Like I've never booked a journal entry that actually mattered.
Community adjusted journal entries.
No, auditors don't post journal entries. That's like you keep arm's length. I look at journal entries. I never posted one.
Yeah.
Independence.
Wow.
So my 3 letters are pretty worthless. But I don't know. Shortening the hours, I guess that's fine. I mean, I kind of rigged my way to 150 anyway. So whatever it takes. Put it this way: there's people without a CPA that are 1 million times better at accounting than I am. So I don't care. Do whatever you want.
I run an accounting firm and I do taxes. I am still 4 classes short, and I can't sit for the CPA because of it.
You Phoenix Online. I did a lot of mine that way.
Well,
that's where I got my MBA. Yeah.
There are CPAs that are 1 billionth worse than you as well. Like we talk about this as firm owners all the time, that like, what is this person doing? And that makes no sense. And yeah, all the time. We have a Marco Polo channel just dedicated to about some of these things with each other. And it's just mind boggling sometimes.
Jeremy named that channel. Guess what it's called?
Group.
It's called Group. I love that. We need one of those.
Love it.
2 more questions for you, gents. In the hit YouTube series Hot Ones, where guests suffer through 10 hot sauces, what number hot sauce is the bomb traditionally? You both slightly missed the mark. It's number 8.
It's
in
8,
the order every single time. But I bring this up because Tom somehow had a lapse in judgment a while ago and decided to do a demo while eating hot sauces with the world's worst accounting podcast host. And I'm curious, for those of you who didn't see, Tom and I ate hot sauces and suffered through a demo. Tom had to do all the work and I just heckled him. But did that creative marketing strategy pay off at all? I'm just curious.
I feel like our MRR doubled after that.
Yeah, this is why you need Jesse and I, like equal genius, right? One guy knows how to code every single thing, understands the API, and one guy goes, wouldn't it be funny if I ate hot wings on LinkedIn Live? And that is the beauty of Finoptimal, right? Like you need both parts, right, Jesse?
Absolutely.
You need someone with good ideas and you need someone with bad ideas.
And let me just say how nice it is that Tom in this episode can finally speak again. He had to take 2 weeks off after that episode.
Yeah, that was brutal. I mean, Tyler, to be honest, though, we did see, I'm not going to say who, there was someone that was attending that was a very interesting person for us. So we definitely got eyes from someone. Not going to say anything. And shortly after, we did see demos booked by people who I've been after for a long time. So whether or not it was for that, just good timing. Definitely worth it.
All of which is to say, at Intuit Connect, we're gonna bring a lot more hot sauce.
Yeah, I was thinking about that.
At the booth.
Like,
Let's do it.
Don't attribute this to Tyler though, because like I can't deal with the head as the way it is. Like we don't need to grow that a little more. Ugh.
Jesse wants me for my next stunt to get a finoptimal tattoo. He said he's going to pay for it.
Ooh.
So
I did.
Yeah.
Maybe we could do a keg stand.
Yeah, location.
location, leg
Face?
on my leg.
Face.
Yeah, right, dude.
I'll pay extra for the face. I'll pay
100
extra
million
for the face.
ARR. Yeah.
Yeah, love it.
Last question, gentlemen. To do a proper accrual, an accountant must make at minimum how many distinct journal entries? You both correctly said 2. And I bring this up because that is the end of our game. And Jeremy, I do want to go back to you in a second, but it also leads into what I want to talk into next, which is finoptimal and specifically accruer and how we do that. So real quick, Jeremy, before halftime,
Yeah.
where did we land?
We landed at a perfect tie with 4 each.
Ooh, all right.
Gentlemen, you're meeting our level of mediocrity.
Only
Yeah.
4. Wow.
What's the tiebreaker?
More to come.
Yeah.
Jeremy, guess what?
What?
Exciting news for our listeners. We've hit another milestone, and I think it's even going to lend us a little credibility. Did you hear about what we're going to be able to offer soon?
I did not.
By listening to Unaccountable going forward, our listeners are going to be able to earn CPE for every episode of Unaccountable they digest. Yes, digest because it takes a whole lot of stomach acid or heartburn to get through this. But log into that Earmark CPE app, take a quiz, and you can earn 1 hour of CPE credit for listening. How awesome is that?
Fantastic. Look at us. We talked about at the end of one of the episodes, we may be doing some good things here.
Fantastic work. Well, hop on into that app and let us know what you think of our show. All right, and with that sound, it is halftime, the part of the show where we go to the sidelines and get ourselves a nice little app snack. And gentlemen, today we are reviewing finoptimal and the entire magic bundle. Please, just give it away. Accruer, Wrangler, Gopher, whatever you got. Tell us what we're all missing in our lives without using the magic that is finoptimal.
I think that our products are best when used together. And what I mean by that is there's lots of single product companies out there that have tools that do some of the things that our apps do, although I have not seen an accruer that parallels ours.
Nope.
Yeah.
But certainly there are other spreadsheet to QuickBooks and vice versa tools, including Intuit's own spreadsheet sync. I really think that ours have been forged by having to do people's books to build processes, and they have features and dials that can be twisted that you're going to have trouble getting from any other single product company. And that our products in combination, Wrangler, which is QuickBooks to spreadsheets, and Booker, which is spreadsheets to QuickBooks, you can build some really powerful things with those things in combination. You can create accruer tracks with Booker. You put for the period in the description field. Use them in combination.
And dare I say, accruer, because it is your gateway drug that I think most people are intrigued by because it's so unique. And I have talked about it on this podcast before, but does one of you have the 2-minute, elevator pitch version of it?
Yeah, I mean, accruer is the easiest way to do accrual accounting in QuickBooks. You do not need spreadsheets to do accrual accounting in QBO. You literally just write for the period and specify the dates for prepaid or accrued expenses, deferred or unbilled or accrued revenue, whatever you want to call it, payroll accruals, fixed assets, and it starts and stops directly within QuickBooks. Or even better, if you're using other tools that feed into QuickBooks, like a ramp or a bill or a divvy, just write for the period in there. The second it hits QuickBooks, everything is done. And people go, oh, what about recurring? It's not even close to recurring entries. It calculates and books everything for you. It creates the schedule for you, and it can handle adjustments and corrections, which I think is so underappreciated sometimes because everyone goes, oh, I just do it right. It takes me 15 minutes. But then when you're going to a client meeting and you realize it's wrong, then you got to go in your file system and find the file and find the formula mistake and try to it was supposed to be October, not September. Tweak it, click save. By the time you're done saying hello, everything's updated. So it's truly, people say it's magic. Yesterday, someone said it was voodoo, which I liked.
Ooh.
So it is now voodoo and magic, but it's the easiest way to do accruals in QBO.
I absolutely love it. So For those, that maybe are intrigued, they need the gateway drug of finoptimal. Like, how do you recommend they both approach engaging you guys, and how do they see if it's right for their firm? Is it one of those all or nothing right away? Is it, just get a hit of the good stuff on one client to start out?
Yeah, just get a hit of the good stuff. We're giving away cigarettes. You take one little puff, and then next thing you know, no, I mean, literally, you go on our site. It's pretty self-explanatory. You could book a demo, or you can get started right away. If you book a demo, it's going to be with me. So maybe you listen to this and go, I can't stand this guy's voice or any of his stupid jokes, and you want to just sign up directly. That's great. It's just saved us both 30 minutes. Or you can happily take a demo, and we can chop it up, and I can see how else we can help you. But yeah, everything's a la carte. Everything's month to month. We bet on ourselves to make sure you love it, and I guarantee you will.
I love it. And pricing, what do people need to know? I mean, what are the base rates? And then, like, if they're big enough, is it pretty much like we're back in a Johannesburg flea market and like everything's negotiable, including your hat? Or like,
to some extent,
sorry, that's personal experience.
Yeah, right.
Yeah. To some extent, things are negotiable. Yeah, I mean, we have accounting firm pricing. So what you see on our website is the price if your client was to buy it from us directly, because we do have small and medium businesses doing that. Accountants start at 50% off of that or less. If you're buying for 10 or more clients, we definitely can start hooking you up. We're app dealers. So, come to us on the low and we'll figure something out for you.
I love it.
Trench coat. Hey, question. So on these, because I work with nonprofits, so we get a lot of audits. Right. When you do these entries on Accruer, like, what does the audit trail, like, who made the entry? What shows as like a system administrator, or what shows up there?
So the person who connected it does show as the entry, but there are a lot of tags and unique identifiers within the journal entries that make it very clear that, hey, this is a finoptimal journal entry.
Okay.
And when you make edits, Jeremy, like let's say you said, oh, it's September to August. Oops, sorry, it was, September to October.
Sure.
It edits the existing journal entries. So you see the audit log of any changes the system is making to existing journal entries.
Yeah.
And every journal entry has a pre-populated memo description, that bottom left field. That's effectively a citation. And it tells you everything about the journal entry, where you can find more, where you like what created the journal entry. So it's very, very ticked and tied. Former auditor, and Jesse's the engineer. So.
If I can offer a quick word of wisdom to accounting firms who are doing this for many clients, this is what we do to deal with the problem of Intuit showing only the person who authorized the app in their audit trail.
Yeah.
We use a dedicated user for each app that we connect. We connect Bill.com. We have a Bill.com service account that's a member of our accounting firm. We have a Finoptimal service account that's a member of our accounting firm. And we use those users to authorize those apps so that the audit trail will say, Bill.com service account booked this. Finoptimal service account booked that. That's one way around it if you really care, as I do, and it sounds like maybe Jeremy does, about 100%. That audit trail.
I've just used one account for like all my connections.
It's another way to go.
Says like it's the connection account, and like that's
way
the
better.
One.
It's way better. It's simpler and way better than having a person do it, because you at least know it wasn't a person who did it.
The beauty is these days there's still some stuff connected through Tyler, and the staff's like, yeah, no, Tyler didn't do any work.
Yeah.
Clearly wasn't.
There's no way you booked that. No way. Cool. Well, so you guys hinted at it. We like being able to foreshadow on some things. And anything you guys can share on what's on the agenda or what's on the game plan for the future. For
Tom
you guys.
was slacking me furiously when I dropped that hint. He's like, "Shut up, shut up, shut up."
Jesse and I will debate this. We debate this literally all of the time. Like I think we could make Booker. When we have another tool called Gopher that we're debatably just going to roll into Booker, which will allow you to create other transaction types outside of journal entries. But, there's the reconciliation tool that Jesse's talking about, our allocation tool. It's going to be one of those three. Yeah, IREC. Well, we'll see. That's what it's called now. It might change the name. But yeah, there's so many things. I think that's honestly, it's an interesting challenge that we go through, because we're not like, oh, we have to build these things. It's like, what are we picking from next? It's a Cheesecake Factory menu of options. But yeah, either allocations or supercharging Booker to do more, or bank recs. I don't know. What do you guys want? You decide right now.
Yeah. Can I give a suggestion?
Please.
So like, I am not a brilliant engineer and cannot do this.
You're just looks.
I'm all looks, right? That's right, baby. But like something where it could like dig into the details and potentially find things that are missing that might slip through the cracks on when you're filing taxes. And you could call it Cracker, or even better, like things.
Can you say that?
things that you may have to pay for that you'd be on the hook for your taxes, and you could call it hooker. www.getyourstuffromhooker.com.
And then we're going to make you a customer by hooker or by booker.
Yeah.
Hooker and cracker. Jeremy, these sound like things that I would pitch to Jesse on our podcast. So I love this.
This is gold.
Hooker and cracker.
Yeah.
I mean, talk about viral marketing.
Yeah. Again, it sells itself.
He's brilliant.
Booker or hooker. Tom, that's good. We should rename Gopher Hooker and be done with it. Let's roll it out before Intuit Connect.
I'm sold. Send it.
We got to change our posters that we're going to have there too. Hooker, and get your hookers and bookers here. Yeah. Book your hooker.
Jeremy,
here.
we'll get shirts made to wear at the show just for this.
Yeah.
There's no way they're letting this on earmark.
You'd be surprised. This is the worst.
I thought you were going to grill us on why we don't have an API, Tyler. I thought that's where you were going with that.
No,
I'm good. I just want QuickBooks to fix theirs. Gentlemen, It's been a blast having you. Before we kick you out the door, any last things you should plug, places they should find you, podcasts they should listen to, anything?
Listen to the Unaccountable podcast for sure. Check us out, Finoptimal. You can see us on LinkedIn, running around, doing crazy stuff on there. We have a podcast, Not Another Accounting Podcast, because our first one, we sold our first one. So the second one is called Not Another Accounting Podcast. But you can check that out too.
Wonderful, gents. Well, thank you for joining us. And yeah, we'll see you by the time this drops. We'll see you in a couple days.
I love it.
Thank you so much. It's been fun.
Yeah, thanks, guys. Well, now that it's back to just the two of us.
Just the two of us.
We can make it. Yeah. Game that I call Boy Oh Boy. And this is all about beneficial ownership interest, right? So this thrown out at all of us. I think it was early this year that it was going to happen. And originally they're like, people are like, oh, is this going to hold up or is it not? And clearly is at this point. Have you done this yet for your firm?
I've actually done it twice, but never hit submit because I'm trying to record Loom videos of how it works and document the process. And so I've never actually still done it. And I'm like, I got time.
Yeah. It's due by the end of the year if you're an existing customer. But anyway, got some questions related to this. So if you are a business owner or a firm owner, either way, this applies to you most likely, and we'll get into that. So let's dive in. So question 1, and all of them are multiple choice or true and false.
Yes.
Welcome, Tyler. So as of 2024, which government agency is responsible for receiving and maintaining the beneficial ownership information, or BOI?
I only know this one because I love their name. It's the Financial Crimes Enforcement Network, or FinCEN, which is the dumbest name because it's like law enforcement is what you call the police. You don't call it crime enforcement. So why are they the Financial Crime Enforcement?
Yeah.
Yeah,
that wouldn't. I was surprised about that. There wasn't a kind of IRS, SEC one. That's kind of what I went for. But hey, I got to give you 2 points for that. You don't even need the options. That's fantastic.
I don't, but it's just like when someone says, do you want to donate money to cancer? And you're like, you mean cancer research?
Yeah, 100%. All right, let's jump into number 2. So which type of entities are required to report the BOI under the Corporate Transparency Act, which is where this was enacted into law? So A, publicly traded companies. B, companies with more than 500 employees. C, most small corporations, LLCs, and similar entities. Or D, nonprofits and charities.
I'm going to go with C.
Yeah, that is correct. So mostly, first of all, music to my ears that nonprofits do not need to do this. But I guess it's probably a revenue generator as well, right? If you want to do this in your firm and do it, we don't do tax things, but it's pretty much small corporations, LLCs, smaller entities. But I also thought it was odd that if you have more than 20 FTEs and $5 million in revenue, you don't likely need to do this.
Interesting.
Yeah, so I thought that was a weird cutoff, and that I don't know, it just seemed odd that, there's a ton of companies that are 5 million and before being public or any of that. Hey, we don't care who owns those. It's just these smaller ones. They're taking it to the little guy. All right. So what's the main purpose of the BOI requirements? Help the government track company profits. That's A. Prevent tax evasions. B. C, to combat illicit activities like money laundering or terrorist funding. Or D, to increase transparency for shareholders.
I am 99% confident they've marketed this as an anti-money laundering scheme.
That is correct. So yes, just trying to make sure, kind of like the banks know your customer stuff. Same thing, know your business owner, to try to make sure we're not doing any shady things with money. Walter White wouldn't happen anymore. He'd have to divulge all of that car wash revenue. Question 4, under the new rules, what is the minimum ownership percentage that qualifies somebody as a beneficial owner? Is it 5%, 10%, 25%, or 50%?
I'm not actually positive, but I feel like it's a bigger number. I'm going to go with 50.
Nope. This one is 25%. So they're generally defining that if someone owns more than a quarter of the company, or at least that they would exercise substantial control over it. So needs to be reported. Question number 5. If you are forming a company, though, in 2024, how soon must you submit your BOI information to FinCEN? Is it 30 days, 90 days, 1 year, or no deadline?
Formed in 2024, that would be 30 days from the inception of the company.
It's 90 days that they're getting.
Oh, snap. Really? Okay, my bad.
Yeah. And again, we did our normal level of fact checking here. If we get any of this stuff wrong, you listeners, please call her out. But yes, 90 days. I don't think I have the rest of it, but the rest of the companies that were created before 2024, when is that deadline?
That would be the end of this year, 2024.
Correct. So as of the when this is going to be out in the world, you got about 8 weeks to go before you need to get this done. Okay. Now, question 6: what could happen if a company fails to comply with its BOI reporting requirements? A, the company's assets are frozen. B, there could be penalties, including fines or even imprisonment. C, annual tax filings are rejected by the IRS and standard penalties would apply. Or D, no consequences.
I'm feeling B pretty confidently.
Is B. So the non-compliance penalties can be a fine up to $10,000 plus a daily fine for $500 for every day the report is late. Also can have criminal penalties of up to 2 years in prison and a fine of up to $10,000. Yeah, I can't wait to see the first time that somebody gets criminally charged for not doing this. Ugh, I feel like the lawyer would.
Can I speculate, though? So this whole entire thing is anti-money laundering. And so they're trying to put teeth behind it. And this is totally, again, me speculating. But they're trying to put teeth behind this so that if someone is suspected of money laundering and they avoid this, now they already have terms and penalties where they can imprison people and do other stuff. But I'm sorry, the hairdresser down the street from me that's making 60 grand a year, they're not going to ever even entertain really trying to go after them. I would argue it's giving them teeth, like they suspect and they already know who it is. And now they have something to lean on and say, well, you didn't file your FinCEN, so we're going to get, it's like they got Al Capone with tax evasion. Like they're going to get some of these money launderers because you didn't fill out your boy.
And I was ready with the Al Capone reference, Tyler. Way to steal my thunder. Yeah, I completely agree. Like, it's just going to give them one more reason to get out the people that they know are shady already. All right, 2 more quick ones. Which of the following is not a reportable change that must be updated with FinCEN in the future?
Yeah.
A new beneficial owner is added. B, the address of an existing owner changes. C, the company name is changed. Or D, the company's annual revenue changes.
I'm going to go with D.
Correct. So any of that other stuff changes, owners, addresses, names of the company need to file. And that, I don't even know if they have that yet, right? Like, what does that change look like? They're just trying to get all the initial ones in. So yeah. Nice work. Then one last one, true or false. If a beneficial owner is a foreign national, the company must still report them under the BOI rules.
I'm going to guess and go true with zero confidence behind it.
Yeah, and I think this is, again, put some more teeth in it that you can't, have somebody who is not an American citizen be an owner of the company and filtering all the things and doing all the crazy stuff from another place. So I think
say like, oh yeah, a company in the Cayman Islands owns this. I don't have to report it. Like, this is, you're right. Give them teeth.
Yep, absolutely. So I think it was 6 out of 8, 7 out of 8, maybe. Nice work.
I mean, either way, passable. And that's what my wife says about me. Like, passable. This is right in my sweet spot. I love it.
Nice. All right, and that brings us to today's winner of the week. And I'm going to call the winner this week, Utah, who just got their second professional sports team in action recently.
Third, thank you very much. Do you not count soccer?
Oh, yeah, MLS. I even like soccer. I should have third professional. We just talk major sports here, Tyler.
And actually, I took my kid to his first professional soccer game this weekend, the women's team. So we actually, we got a couple. A nice 3-0 victory over the Seattle Reign. It was great.
Nice. All right. What's the newest one I'm talking about?
You're talking about the Utah Hockey Club.
The Utah Hockey Club. Has anybody ever had a better name than that? That's fantastic.
We've got a lot of things out there that they put it to a fan vote to the public of what do we name us, but they're just like, you know what, we're not going to rush into a name year one. It's like the Washington Commanders, right? Where they went, we're just the Washington Football Club for 1 year. I'm excited. I'm still hoping the Storm and Mormons win out, but we'll see.
Yeah, that'd be fantastic. And did they take, so they came from Arizona, right? They were the Coyotes before. Was there any movement of personnel, or did the existing Coyotes team stay whole and just transferred?
The team moved, and coaches and staff, all moved to Utah.
All moved out. Okay. So it wasn't like an expansion thing or anything else, because they came out of the gate 3-0, right? So that's fantastic.
I think we suffered one loss in New Jersey, but opening night, and the thing is, we're selling out games. It's like we're becoming an economic hub, dare I say. It's exciting.
Yeah, nice. Cool. So
Go
definitely
Team Salt Lake.
Go Team Salt Lake. Love that.
And Jeremy, our loser?
Yeah, loser of the week is, I'd say, again, either financial firms or businesses looking for labor. I know we've talked about this before, but Ernst & Young recently just put out their tax and finance operations survey. And some interesting statistics, if you've got a couple more questions in you.
Yeah, hit me.
Yeah, all right. What percentage of the CFOs and corporate tax executives that were interviewed feeling like they have a bad talent pool to be able to pull from here? I'll give you percents. I'll give you three options: 60, 70, or 80%.
I'm going to go with 70%.
70%. Yeah, right call. The other one, which I won't ask you here, it said, in the U.S., 3/4 of CPAs reached retirement age in 2019. I don't think I've seen that stat before. We talked about that?
Oh, you have, because we've asked people that on the show. That was the Wall Street Journal article, and we're dying off, man.
Man, yeah, that is brutal, man. Wow.
Yeah.
Then one other one I liked out of this, too. It was just separate, where they talk about the people that they have on staff. What are they doing right now, and what do they want them to be doing? And I'm going to make you put these ones out there. So the three things they put out there were routine compliance activities, like your core tax function. This is mostly around tax things. And then highly specialized strategic tax activities. So those were the three buckets. Any guess how that is currently split out by percent, and what the preferred split is for these high ranking C-suite peeps?
I mean, I don't know percent wise, but I would guess it's way too heavy on the bottom of basic work, which is where they want tech to do all of it. And they want people doing high level thinking, but it's too heavy. So I don't know, if you do standard bonuses, we do 50, 35, 15, right? I would say right now they have 50, 35, 15 of not enough high level work and too much base level. And they want to flip that.
That's almost verbatim. So right now it's 45, 35, 20, and they want it 25, 33, 42. Yeah. So
just and that's going to be the hard thing. And then getting tools like Finoptimal, Accruer, and all these things that can automate it so that you're not, I know some of these tools cost money and you're thinking do I want to pay $20 a month for that? But that's replacing 1 hour of staff time. If you can replace more than 1 hour of staff time a month, by all of a sudden automating all that stuff, you only need staff to do the high level thinking.
Which was what we get paid to do somehow.
I'm not from Colorado, but they call that high level thinking.
Level thinking, yes. Do you have a review for us too?
Yes, that's why I was so excited. We got another review. This one wasn't backhanded though, which I'm so happy people love us, but I'm kind of digging the backhanded reviews. So listeners, both of you, we need to get on there and leave us another one. This one, informative and entertaining. I listen to Unaccountable while working on my treadmill. Seriously. Working out on my treadmill. Now that means I'm exercising my brain while exercising my body. I aspire to be accounting nerds like Tyler Otto and Jeremy Van Grohl. So much knowledge and passion for all things accounting and tax between these two. Jeremy, someone said you know about tax.
Only
we fake it well.
Only the things you've shared.
They also delve into the content in a very entertaining way, and their format encourages listener participation. I both test my knowledge as well as learn new things every episode. And that was 5 stars, Apple Podcast from SLA245-82947.
Hey, you're a 9er in there? Man, that was awesome. Yeah. Thank you.
Jeremy, fantastic week. Next week will be an Intuit Connect. We don't know what this episode's going to look like. We're going to smash it together. But excited to see you there. Listeners, leave us some reviews. If you see us at Intuit Connect, please come bug us. If we have shirts, we'll give you one. If we don't have any shirts, we'll give you the one off our back. And it'll be awkward. They'll ask us to leave. It'll be a whole thing. Can't wait to see you there.
And Tyler's going to buy each one of you a drink. It's fantastic.
With our bounced bank account.
Yeah.
Jeremy, see you soon, man.
Sounds good. Hey, Tyler, my staff has asked me to get better knowledge and training in spreadsheets and Excel. Any ideas?
Well, yeah, dude, I'm a little offended. You go to tylerauto.com, we have a course on intermediate Excel formulas. Just have them go over there and use promo code Unaccountable for 50% off.
Nice. Gonna do that. Thank you, sir.